I'm Roger Montgomery and welcome to this week's Video Insight. Well, with Apple's market capitalisation recently nearing the market capitalisation of the entire US small cap Russell 2000 index, and with Tesla founder Elon Musk's personal wealth exceeding that of Facebook's Mark Zuckerberg, you might have been so distracted by the machinations of the stock market that you've completely forgotten what is happening in private equity. I keep track of private equity markets partly because they are incredibly illiquid and yet have attracted the vast bulk of the wealth tied up in, for example, university endowments and the family offices of many billionaires. Indeed, according to its March quarterly report, Australia's own Future Fund has over 18% of its portfolio tied up in private equity. Now, part of the reason for the asset class's popularity is the relatively low level of reported volatility. If you aren't revaluing the asset daily, of course, volatility is bound to be less than equities. But reporting lower volatility doesn't mean volatility is lower. In March this year, when the financial world finally acknowledged a pandemic, many investors predicted private equity and startup wallets would be zipped up, and the steady and some say insane growth in startup and private equity valuations was near an end. But here we are, 6 months down the road, and both the pandemic and elevated private equity valuations remain. In this video, I thought I'd report on some of the recent developments in private equity and startup land and leave it for you to draw your own conclusions. The veritable tidal wave of tech unicorn IPOs and backdoor listings has continued recently, with companies including Snowflake, Unity Software, Jfrog, Sumo Logic, Palantir, Asana and Amwell striking a combined valuation of roughly $43 billion US. And if you think these companies must be profitable, think again. Cloud computing and data analytics company Snowflake said that revenue in the first half of 2020 more than doubled to $242 million, while its net loss was $171 million. Despite these losses, the company raised money from Salesforce back in February at a $12.4 billion valuation. Today, its valuation is approximately $14 billion US. Jfrog is a company that allows developers and companies to deliver application updates in the background without disturbing the user experience. In the second quarter of 2020, the company generated revenue of $36 million and a profit of just $1.7 million. When it raised $165 million in 2018, it did so at a $1.2 billion valuation. Finally, Asana is a project management software developer founded by Facebook co-founder Dustin Moskovitz and early Facebook employee Justin Rosenstein. In 2019, the company generated revenue of $77 million and a net loss of $51 million. In fiscal 2020, the company's revenues doubled to $143 million, but the losses more than doubled to almost $119 million. The current valuation is $1.5 billion. Not all the noise, however, has been in the tech spaces with the magic words cloud and software. Back in 2012, a 17-year-old Austin Russell dropped out of Stanford University to start a light imaging detection and ranging technology company for self-driving cars. He recently merged his company Luminor with a special purpose acquisition company backed by the Gauze Group, valuing his company at $3.4 billion. He's now 25 years of age. Over in the eyewear category, sunglasses e-commerce company Warby Parker now has a $3 billion valuation after raising $245 million through Series F and Series G funding rounds. When it last raised money in 2018, the valuation was $1.75 billion. According to reports, recurring revenue is $100 million. Therefore, the recent capital raising was struck at 30 times revenue. Good luck. Well, that's all we have time for this week, but we'll be back with more interesting video insights soon. In the meantime, please continue to follow us on Facebook and Twitter.